Good morning and welcome back to Almus Market Mornings, your daily dose of global financial updates. This week's major rate decisions are out. So, what's the summary? A hike by Japan, pause by the RBA, Fed, and BOE, and finally a surprise rate cut by the US National Bank. Currencies are broadly back where they were before the Fed meeting, but the equity rally has continued with fresh highs by markets in US, Japan, and Europe. Morning, JK. Now, after all the major central bank decisions, what's your take on the narratives developing in the financial markets?
Good morning, Swaraj. Yeah, definitely this week, central bank watchers had no time to relax. And, it's been quite a week for central banks. They had the Japan moving out of negative rates. Fed continued to project three rate cuts. Said we surprised the markets yesterday by cutting policy rate. Finally, the Bank of England also fell in line with what Fed and ECB are likely to do, that is, rate cut in June. This UK rate decision came after inflation previous day showed lower than expected, and they are hope and they are actually expressing confidence that inflation will move in line with expectations, and therefore they will be in favor of cutting rates in the near future. Uh, the Swiss National Bank, of course, for most people it was a surprise because uh, assessment was that they will hold on to 1.75 policy rate. But looking at the inflation that has been steadily falling below 2%, which is their target, the central bank became the first one to cut the policy rate, reducing it by 0.25%. And they are also reducing their average inflation forecast for the next 2 years. Quite expectedly, Swiss franc weakened by more than 1.75% against the USD and 1.25% against the euro. Although the central banker also said that they remained ready to intervene in the forex market. Of course, standing out on the central bank side also was Turkey, which raised their policy rate by 5% from 45 to 50%. While that looks big, the inflation rate, it looks even much worse because it is at 67% in February. Now, what is notable with all these central bank moves is that while most central banks are on the verge of loosening policies, Japan has tightened, although by a minuscule 0.1%. There is an indication of further tightening by Japan in July and September as well. So eventually, yield disadvantage of yen is likely to diminish and help the currency to regain, even as we have started to hear official voices of protest against its sustained weakness. But if you look at the overall greenback, it has continued its broad range between 103 and 105 in the last few months. And despite signs of pickup in Eurozone and UK economy, performance of the US economy remains superior, and their yield advantage still keeps the dollar well supported. So a possible risk-off event has the potential to push the dollar to its October 23 high of 107.50, but that requires a break of 105, the higher end of the range. Uh, Actually, dollar seems to be regaining some edge. Uh, See, earlier the Fed's dovish dot plot in December had kept it weak. Now, many other central banks are also closing in on cutting rates in June, and SNB actually already did it. Japanese move hardly meant anything for the big yield difference between US and yen. Therefore, you know, most investors don't feel the need to disown the dollars because gives one of the highest yield among the major banks. Uh, so on the US markets, of course, all the three major indices hit a record high for the second day in a row. Uh, Again, this is driven by expectations that rates are eventually coming down, and one major central bank has already cut the rate, and there is even talk of a QT tapering in the coming months. So overall, dollar looks currently quite strong. Uh, of course, the break of 105 is what would spur more gains. Uh, there is also another thing that can be building up for most dollar strength because asset markets look extremely richly valued, and any sell-off due to a negative trigger can actually increase the demand for dollar as a safe haven. Definitely, right now, dollar is looking more strong against the low yielders like yen and Swiss franc, and also EM currency. Chinese yuan, for example, has already broken the 7.22 levels, looking vulnerable further. I think while that is the case, dollar rupee is also behaving almost similarly, breaking resistance at 73.05 and 10 quite easily. Offshore showing more than 83.20. It seems like almost the market has become one-sided, more buying and much less sales. And this also coming on the back of broad market belief that the flows will dominate, and particularly being the month of March, the year-end related selling will ensure that the rupee will remain strong. But I think the emerging scenario in the global markets of particularly EM currency weakness, and also overall dollar index showing firmness, add to it a bit of uh, you know uh, turmoil, or I can say turbulent political period ahead in the next 2 months. Although eventual results are expected to be for a stable government, these things will keep the investors on the sidelines. Therefore, you may see a long lull in the FII flows, which obviously makes it vulnerable for the rupee to weaken. Then what we look forward to is RBA to fill the gap of flows not being there. So if they do come in, as they have done in the last 1 year at 73.30, rate might be contained, but downside, unless we go below 83, difficult to see more gains in the near future. So until these political situation continues for the next 2 3 months, I think we will see two-way volatility in the rupee as well as in the asset markets in India. So one investors may be slightly on the edge, definitely. Of course, subject to dollar index remaining stable. If there is a bigger rise in the dollar index, that can make the rupee more vulnerable. Thank you.
Thank you, JK. And as you mentioned, it was a busy week for the central bank watchers. And of course, SNB cut policy rates by 25 basis, which was a little bit of a surprise. And they also reduced the average inflation forecast for the next 2 years. One other narrative which is developing is from the BOE, which is slowly coming in line with the other central banks like ECB and Fed, with expected cuts in June. When it comes to equity, the major global indices are still hitting all-time highs: S&P 500, Nasdaq, and even some indices in Europe and of course Japan. For rupee, we moved higher, breaking the resistance of around 83.15. Now, the emerging global scenario, the political uncertainty as well as weakness in Asian currencies can impact some of the FII flows, making the rupee a little vulnerable. So we'll keep tracking this particular narrative. That's it from us today. Thanks for listening. Wishing all of you a very happy Holi. We'll see you all on Tuesday with the latest in the financial markets.